Peter Schiff, the CEO, Euro Pacific Capital, assets under management $540 million with an M at last count, joins us live out of Weston, Connecticut. Peter, always good to see you and appreciate your time. So let's look ahead if we could and try and get past Thanksgiving, look at December and the 16th and that Fed rate hike, if indeed it does happen. That seems to be kind of a foregone conclusion, 3 to 4 chance of that happening. The debate now seems to be what happens to the rest of the cycle, and a lot of people are worried the Fed is risking it may already be behind the curve if inflation, etc., and energy prices pick up on low base effects early next year. Do you think that is true?
Well, first of all, people have thought it was a sure thing for a long time now. And so I still don't think that you can bank on the Fed raising rates in December. They might. But it's not a done deal. And I think if the Fed does raise rates, it's not going to be the end, or rather, it's not going to be the beginning of the tightening cycle, but it's going to be the end. I think that if the Fed ends up raising rates, the next move might be to reduce them back down to zero, because the economy is rapidly decelerating into these rate hikes, and we could be back in recession in 2016. And I think that the Fed is really reluctant to raise rates for that reason alone, in that it doesn't want to look foolish to just raise rates very slightly and then have to bring them back to zero again and launch another round of quantitative easing.
Oh, yeah, indeed. I mean, other central banks have suffered that kind of embarrassment before as well, something that I'm sure the Fed would like to avoid. But are you saying then that it's not just the economy, the U.S. recovery that's vulnerable if the Fed pulls the trigger in December? Are you saying also that the market is vulnerable?
Well, the market is definitely vulnerable, because the only thing that the market's got going for it is the Fed and the cheap money. It doesn't have the underlying fundamentals, and it doesn't have the earnings. But it's not the U.S. economy that needs cheap money. It's the bubble that the Fed has inflated in place of the U.S. economy. That needs more air. But I think what the Fed needs to do is prick that bubble, allow it to deflate. Unfortunately, that means a very protracted recession, maybe even another financial crisis, to get the real economy back on track. See, that was never able to happen. We never had a legitimate recovery because of the Fed. The Fed prevented a recovery and replaced it with a bubble, and that's what it's trying to nurture today.
Oh, so it sounds like they're sort of stuck between a rock and a hard place. What are you telling clients then, investors?
Well, I've been saying the same thing for a while, and not that many people have figured this out. I mean, they still believe the Fed. Every time the Fed talks about how good the economy is and how they're just getting ready to raise rates, everybody runs out and buys the dollar. They sell commodities, they sell gold. They actually believe what really is propaganda coming out of the central bank, that we have a viable recovery. We don't. And I believe that, the Fed is laying the foundation for another round of quantitative easing. Who knows what they're going to blame it on? They're still going to try to claim that their prior monetary policy worked. They just need to do it again, only bigger. But the question in my mind is, when is the market going to figure this out?
So talking about possibly a QE4. Interesting, which kind of leads us nicely to the data we had overnight. Kind of a mixed picture. Durable goods, those were looking good. On the consumer side, not so good, which raises a lot of questions about just how strong Q4 growth is going to be. Is that going to disappoint, do you think, Peter?
Well, I think so. First of all, yesterday we got the revisions to Q3, and the reason they took the number up was because of the big inventory build. And this has been going on all year, where businesses have overestimated the strength of the consumer based on all the recovery propaganda. And I think businesses have made a mistake, and they have too much inventory that they can't sell. And that mistake is going to lead to weaker GDP in the future. In fact, today, the Atlanta GDP Now just downgraded their estimate for Q4 from, I think it was 2.2. Now they're down at 1.8. And I think they're going to have to go even lower than that. Judging by, look at the numbers that came out today on consumer spending, basically almost flat. The last 3 months have been pretty bad. And, we've got this holiday season, and I think it's going to be, a very, very poor season. And you've got all these companies now that are loaded up on inventory that they can't sell. Meanwhile, in the third quarter, corporate profits dropped, I think, 4.7%, the biggest drop since 2009. So if corporations can't sell their products, and if their profits are falling, the next thing that's going to happen are the layoffs. And I think they're going to start in the first quarter of next year.
Oh, my gosh. Okay, it doesn't sound good. So listen, Peter, kind of related, but not really that material to the discussion, only because we've got a poll going on. I'm wondering if whether you've gotten a jump on holiday shopping yet, and if so, if you're shopping online, are you doing it, Peter, on a desktop, a PC, or are you doing it on a cell phone, on a tablet on the go?
Well, I haven't bought a single thing, although that might not be the case for my wife. But, you know, she does most of her shopping now on the internet. And, I think internet sales are going to continue to improve, but it's not going to improve enough to offset the decline that you're going to see in the bricks and mortar. And, of course, why not buy stuff online? Because these companies don't even care about making a profit. Look at Amazon. Amazon sells stuff for less than it costs. All right. So they just keep selling stuff and losing money. So I'm willing to buy my merchandise from a retailer that doesn't mind losing money selling it to me. So, this is the problem that everybody has when you have companies that are, selling at a loss because they're trying to drive their revenues, not their profits, because the people buying the stocks don't care.
All right. Listen, Peter, great to have you on. Appreciate the time, the talk, and happy Thanksgiving. Peter Schiff there, Euro Pacific Capital out of Weston, Connecticut.